Today I have an update regarding Trent Limited, which is a part of the Tata Group of companies. Stock jumped 6% despite 56% year-on-year decrease in net profit. This is concept jump, retail concept nearly jumped 6%, reporting Q4 FY25 financial results with a net profit decline of about 37% quarter-on-quarter and 56% year-on-year. So market capitalization of 1,91,000 crores. Trend closed at 5,380, nearly 3.3% up. Uh, Previous closing was 5,209. Company has delivered positive returns of 24% in the last 1 year, but fell 3% in the last 1 year. Latest regulatory filings trend around financial results Q4 FY25. We'll go through the details once we go through the numbers. Companies engaged in retailing, trading of apparel, footwear, accessories, toys, games, etc., operating through Westside, Zudio, Utsa, Mispu, Excite, and Samoa retail formats. Disclaimer: the views and investment tips expressed by investment experts, broking houses, rating agencies on the internet are of their own and do not reflect any of my own personal views. Investing in equities possesses a financial risk of loss. Investors must therefore exercise due caution while investing or trading in stocks. Myself, as the author of this article, I am not liable for any loss caused as a result of the decision based on this article. Please consult a financial investment advisor before investing. Let's look at some more numbers. Okay, there we go. You see the current price 5,510. This is 3.5% up in the last 5 days, minus 25% in the last 6 months, and 28% in the last 1 year, which is a good performance of the company. This is the logo of the company. Company ownership strength is missing the benchmark. Stock is at a premium valuation. Company is managing the assets very well. Company possesses stable growth history and manageable debt. Price to book value 34.36, face value 1, book value 156, debt of 499 crores, cash of 286 crores, earnings per share last 12 months 53 rupees, promoter holding 37%, sales growth 55%, ROE 38% comparative to peers, Avenue Supermarket, Vishal Mega Mart, Aditya Birla Fashion, Metro Brands, Red Tape, PNG, Gadgil Jewelers. So you can see uh, most of the companies have a high market capitalization apart from Metro Brands, Red Tape, and PNG Gadgil Jewelers, which are less than 30,000 crores. Then look at the price to earnings ratio. 45, 45, 70. Trent has 101, Avenue Supermarkets 96, Vishal Megamart 155. Those three are very high. Metro Brands also of 70 is very high. What is important here is return on capital employed. So far, Trent has the best return on capital employed. Red Tape has nearly 40%. PN Gadgil Jewelers 31%. Avenue Supermarts 20%. So public holding of 26%, highly volatile in terms of volume and price. FI is 20%, DI is 17%. So these two together bring some stability. However, public holding of 26% is quite high. Trent is engaged in retailing of apparels, footwear, accessories, toys, games, food, grocery, and non-food products through its retail platforms. This is what we've been through already. Company is trading at 35 times its book value. Median sales growth is 21% in the last 10 years. Good return on equity, 26%. Good profit growth of 75% in the last 5 years. Some companies to uh, compare with. You have Ethos, you have Red Tape, you have Brainweave Solution, apart from the others that we discussed through the previous site. Uh, you can see the sales have been stagnant. There was a revenue increase in December quarter. However, the net profit hasn't been as consistent and as expected by the market expectations, though the company still has been able to add value based on its overall good performance. You can see year on year, the profit has grown in the last 2 years drastically from 400 crores to 1,500 crores. That is one of the reasons why the company has had a good run of recent. Then 70% profit growth, return on equity 32%, stock CAGR price 25%, and sales growth of 38%. Then you can see reserves are increased from 2,500 crores to 5,400 crores in 2 years, which is an amazing run. Borrowings have reduced from 4,400 crores to 2,200 crores again in the last 2 years, which is an amazing sign. Then you have inventory days reduced, days payable reduced. Overall, the working capital days have increased, so a little bit of a concern. However, return on capital employed has been growing year on year from 12 to 32% in the last 2 years, which is an amazing job. So, friends, that is it for this company today. Seems to be doing well based on the last 2 years trends, which is an overall great improvement in the performance with terms of reserves, growth, revenue, profit, net profit, operating margin. All of them have been amazing, and this is industry which is highly dependent on peak season. That could be one of the reasons why the stock price has added good value. So thank you for watching. Please share this with your friends, family, and associates so that they could benefit from this information, and we look forward to bring another video to you very soon tomorrow. Thank you. Have a great night tonight.